Sustainable wealth isn't formed only in the money that you have. It is a factor of many types of capital that create outcomes that cannot be taken away. Hi, this is Justin Hitt with Sustainable Wealth Secrets. With all this excitement about GameStop pumping a stock up and all this excitement about silver and other market conditions in the stock market, we often forget the other opportunities that are out there. I know by mentioning GameStop, I'm dating this particular podcast, and I like to produce evergreen materials. But here's the concept. It doesn't matter whether it's the dot-com bubble, whether it's a real estate bubble, whether it's stocks going on right now. There's always hidden opportunities in the marketplace to create wealth that has nothing to do with stock market. Now, for example, for every $1 million you have in investments, they can cash flow $40,000 in the stock market. So that's income investments. Now, we're not talking about investment strategy. We're just talking about some basic concepts. For every $1 million you have in the bank, you can produce $40,000 in cash. That cash represents cash flow. Now, if you ask yourself the question, what else can cash flow? We have answers such as land, rental properties. It could be fixed assets or other materials. It could be a job or labor, so some kind of active income. All of these things can cash flow. So if you have the living expenses of $80,000, you could either have $2 million in the bank, a job that after taxes nets $80,000. You could have real estate that produce $80,000 a year. That might be 8 to 10 properties if it's residential. It could be a fewer properties if it's commercial. You could have land that has a farm on it that produces cash flow, but also has tax deductions to offset the taxes on any other combination of income. There's a pretty diverse portfolio. And when the media is talking about one, I guarantee you that there are other hidden opportunities that smarter people than both of us put together are taking advantage of. One such opportunity is called the Opportunity Zone. So Joe Biden signs a bill about opportunity zones. Donald Trump put together opportunity zones. I think in 2017, the concept of opportunity zones was in the news and it was expanded. There's something interesting you might notice if you're in the market to buy agricultural land. See, opportunity zones, and I won't go into a lot of detail, but opportunity zones give you tax breaks and ownership opportunities to basically reduce your increase your cost basis. So you buy a property, it has an artificial increase of 10% on your cost basis if you've met other requirements, so that when you sell the property in a certain period of time, you'll be able to lower your taxes of sales. So you buy a piece of property such as a farm, the farm cash flows, and that cash flow over 10 years pays for the land. So you got all your land money back. Then you sell the property itself. You could sell the farm you could own the land under the farm and then sell the land to the farmer. And now you're going to cash out on the property again. But because you almost got 100% profit, your taxes would be higher, but the opportunity zones, and I'm simplifying it here, would actually set you up with a different cost basis to lower your taxes. What'll end up happening is the $1 million you put into the land will return you money back, whether you earn money on the land or not. So if you had to sell the land for less than you purchased it, the cash flow and the sale of proceeds will net much larger than you would in any other type of investment. Now, an opportunity zone is a geographic location. Okay, so this is an area that has had economic problems, and maybe there were factories there that are gone. Maybe there's a rural community that doesn't have any internet. There's other opportunities in this that if you match your cash flowing business, see, a business is another opportunity to generate income. If you match your cash flowing business with a specific geographic location, you could have other benefits such as reduced taxes, such as access to opportunity funds, federal money, state money, and so on. But that's just one example. See, I have the unique benefit of working with hundreds of different accredited investors, affluent individuals, high net worth individuals to learn about these types of opportunities. Now, I can't always act on them, and neither can you. Just like the scenario that if you had $2 million in the bank, you could produce $80,000 in income, or if you had a job that net $80,000 in income, or if you had X number of properties that net $80,000 in income. See, all these, the conditions are unusual that you're going to have all of them, but there is one condition that would be unique to you. So here's how we benefit from this. First off, if you see a bunch of hype in the news, sure, you can take a small percentage of your portfolio and play the game. Okay, so GameStop's ripping and roaring, and you can gamble a little bit there. Silver's ripping and roaring. Actually, silver dropped today. You can put a little bit there if you're playing around there. But I'm not really talking about playing around if you want sustainable wealth. I'm talking about figuring out ways to reduce your tax liability, to engage your capital in such a way that it generates wealth. I personally believe that land is capital that can provide for you both a place to live, or rental income, or agricultural proceeds, or in some cases, solar farms, bamboo, all kinds of ways to make money from your land. It could be hard assets, but then it doesn't necessarily have the cash flow question. Let's say you bought $1 million worth of gold. $1 million worth of gold is not going to spin off dividends. It's not going to spin off interest. It's not going to spin off anything. In fact, you're actually going to have, if you had $1 million in physical gold, you're actually going to have expenses associated with the gold, which would offset any paper gains from the appreciation. And you'd actually have to sell some of that physical gold in order to turn it into cash. Now, I know the U.S. currency is having challenges, and there's inflation and all these other things going on. It is a complex world. Again, that's why I always recommend you work with a fee-based financial planner. You work with a family office or virtual family office. You work with a CPA. You work with a tax attorney. You work with these other individuals. And then you, of course, work those into your cash flow. So if I had to summarize all this, there's a lot of investment opportunities out there. Some of them are hyped up in the media. Some of them are hidden from your view. But all of them can be measured by their ability to generate free net cash flow. That free net cash flow is the result of covering your expenses, covering your debt, covering your taxes. And that free net cash flow is the only real capital that you have. But it doesn't necessarily have to be cash. Free net cash flow could be equity in a customer base stored inside of a business. It could be agricultural product that will come in 2 or 3 seasons from now, or it could be the next season. It could be insurance policies that hedge environmental changes or health changes or other aspects. It could be the education that you gain or the investment you make in yourself that pays off dividends over time in your earning ability. All of these factors together is the mindset and the perspective that those have who create sustainable wealth. There are estates, there are massive fortunes developed and maintained through seeing the world a different way. But they all build on what's the proceeds left over. I put in this, I got this out. It also builds on syndication. You might have a diverse portfolio, but as you find opportunities, you may invite others in on those opportunities. So, for example, the opportunity zones have opportunity funds where accredited investors can invest, and that money is pooled, and then it's put into properties because there's a limited number of properties and sometimes an unlimited amount of money. But altogether, your takeaway is net. You can figure that net out on paper. You can project that net out with financial models. You can compare that net against inflation or other opportunities, but it is a complex model that needs to be developed if you want sustainable wealth. Again, don't limit yourself on just cash opportunities. The stock market is not the only place to put money, and money is not the only way to build wealth. These things are investments. All investments should be measured and monitored, and please only invest where you feel comfortable or you've worked with someone who has a level of expertise that can reduce your risk. I am risk adverse in most cases. I do measure and can only tolerate a certain amount of risk. And that's why, and this is what I've learned from others, and that's why wealth can build and grow. The rich do get richer because they understand how money works. It isn't just cash. It isn't just capital. It isn't just monetary capital. It's a variety of other things. And perhaps you have insights and knowledge that can unlock opportunities in your own way that others have not thought about yet. But all in all, if you've got questions about what we talk about here at Sustainable Wealth Secrets, you can visit us at www.sustainablewealthsecrets.com. We have a newsletter that I'd like you to subscribe to so you can get informed about new ideas and concepts that come out about multiplying your wealth, building your net worth, and driving forward outcomes that others in hindsight will think are unusual. It's also about a contrarian approach rather than following what the media talks about. If you're not aware, the media can be manipulated, and opportunities abound far beyond what you hear in the day-to-day news. In fact, if you're hearing it about the news, it's usually too late. But I digress, and I'll wrap up here. I'm here to help high-income professionals, affluent individuals, high-net-worth individuals, basically create a legacy to turn your income and your day-to-day active income into long-term net worth. Thanks for listening.